After the flash crash and billions of dollars in liquidations last Friday, we might be seeing a second leg of that movement, maybe with insider manipulation, markets, liquidity, or is it about the dollar? So let's talk about it. We actually got a couple of questions from our members, and I highly encourage you to do so. So now we are both on Substack as well, and our platform and a Bitcoin intelligence report. So basically, the idea you guys asked us to explain a little bit of what happened in the markets, but especially now on this second leg and what it means, especially when we see the DXY also moving up. So let's discuss about it. First off, let's see the current movement on Bitcoin. So we are seeing a new retracement, and there is a lot of speculation that we might see a insider, either in the Trump administration or whatever, that knew what was going to happen with the whole China announcement that they are currently severing ties and the meeting is not going to happen anymore, but all of a sudden everything is back on track. And then we had a huge leg up yesterday, but now we're seeing a little bit of a risk off again. So what's going on here? So if we're looking to the insider perspective, this has arisen in many of the forums about a short position of a huge whale that is opening that position for the second time. So let's see what happens here. Almost $500 million on a 10x leverage. And of course, if you're leveraged, you have to know the game you're playing. So we don't play around with that at all. Our stance is always on the longer term. So this here may be one of the moves on Bitcoin. So a little too early to tell, but it doesn't really matter if you look towards liquidity and what is truly happening. We have two ways of seeing that. So this is the more insider trading part, but what is really interesting to see is a little bit of the reversal of the dollar. So if we go back to the DXY, subscribers actually have been following along of this specific movement here. So if you, from July 1st until now, where we did see basically, at least for now, a local bottom at 96.5 on the dollar index, comparing the dollar to the other main currencies worldwide. And now we're seeing a little more stubborn of a reversal at 99.3. So we have this whole scenario of the weak dollar, of distribution of dollars worldwide, it losing GFC status, like global GRC status, global reserve currency status, and this has built up a lot. However, as we discuss on our Bitcoin intelligence report, this is a big myth, so to speak. So we do see a movement in gold for sure, where if we go here to gold, so it's a very, very interesting movement that is happening right now. And many call it the debasement trade. So basically based on gold being at all-time high. So now we are over $4,100 an ounce, which is absolutely incredible. It has actually been outperforming Bitcoin this year so far. But it's important to understand here that there are many movements at the same time, and DXY might be just a symptom of something that is happening underneath. So gold is being played as a neutral asset in comparison to treasuries, not really to dollars. So you need dollars to serve everything, or even to buy gold at all. But now we're seeing that those dollars are getting scarcer. And at the same time, those dollars are being deployed all over the place. So we had this persistent narrative of a replacement of that, or at least the percentage of market share on reserves, especially on central banks, that they are switching treasuries to gold. There might be something to it, but at the same time, you could expect, if that really was the case, you would expect for yields just to go up over there and not to go down, as I'm going to show you right now. So especially the 10-year yield, not USD, but US. So look at what's currently happening on interest rates on the 10-year yield in the United States, which is the reference for mortgages and so on. It's absolutely plummeting, especially from the beginning of the year. So it has just been going down. And if you remember, around March, April, May, we had this whole discussion of how bonds are absolutely dead. Nobody wants the US debt anymore. So, and the yields are actually coming down, showing that there is a lot of play for safety and liquidity. And in my opinion, that's exactly what has been playing right now. And we are tracking on our Bitcoin intelligence report the liquidity of bank reserves. So you have the American system and you have the offshore system. So within the United States, you have a lot of stimulus coming from fiscal spending. The problem is outside of the US, where you have the Eurodollar system, where they do not have access to those dollars via fiscal. You need bank lending, you need repo, you need credit generation interbanks, and we are seeing the first hiccups on that system. So we're going to be tracking. It's not like a deflationary spiral, nothing like that, because liquidity is still plentiful and at all-time highs. But this movement shows a little bit of how we are going towards a more defensive approach. So we're going to keep tracking that, and the DXY is a great way as a result to understand. It's not really the cause, but it shows a little bit of more dollar scarcity to serve that outstanding debt. That might create some downturn as well for assets like Bitcoin, especially on a risk off, if that really confirms. So we don't know that yet, but it's something that we need to keep track of it. So a lot of stuff going on at the same time. Still, liquidity is plentiful, so we are taking advantage of that. So at the beginning, if you see what is currently happening with the plumbing, I would still it still suggests that liquidity is plentiful, but maybe not as fast as before. However, you never know, based on the current administration, how they react to it. That's the most important part. So when we have a mismatch of the contraction of credit in the private market, but all of a sudden you don't have yet that fiscal response, that might create a few air gaps. And those air gaps could be some opportunities as well. So interesting to see. So let's track the dollar, especially if it goes over 100, but this is not a weak dollar anymore. So we have to tell it what it is. And maybe we are at the end of the ex-US trade, so to speak. And now flows are coming back to the United States. So let's see, a lot of volatility coming up, and that's a very interesting scenario for worldwide liquidity. All right, see you guys in the next video.